Hey, welcome and thanks for joining us. We have I have Tavi here with me today, who'll be doing a macro update in just a couple minutes here, and Quentin will be joining us again, but with pre-recorded segment that he recorded yesterday, so it's pretty fresh. But he's been traveling and out in the field again, and so he had to pre-record. But so we have an exciting show for you today. I wanted to update everybody on our hedge fund strategies because Crescat has been having a great year, and we continue to have a good month across the board in July. And our funds, all five of Crescat's hedge funds are are among the top six. We have five of the top six hedge funds in the Preqin database through July for year-to-date performance, and all of our funds are pushing new high watermarks now. With global macro also being the only one that is just a few percentage points shy of that all-time high watermark there, but it's global macro is the one that's performing best year to date as well. So I encourage you to check out our funds. I think we have a lot of exciting themes across the portfolio and positions, and I think there's a lot more good performance to come. No guarantees, but I really believe we have a lot of tailwinds, with respect to our themes in our portfolio, and it's still very early innings, especially in our activist metals theme, and we have two funds that are dedicated to that theme: the Crescat Precious Metals Fund and our Institutional Commodity Fund, which are both dedicated to our activist metals portfolio, which at this time is a long only portfolio of mining companies. And let's go on to the next. So one thing I'm really proud of this year is that we have just, with last month's performance, just completed our first 5 years of track record and performance for the Precious Metals Fund. So we launched this fund on August 1st of 2020, and it, in hindsight, that was a time when gold had actually just peaked, and for that time frame, it had a big run in early August, and gold stocks had just peaked as well. But it was a time when the junior mining segment of the market was still performing really well, and that's where our portfolio was focused. And so we continued to have very strong performance from that launch date into May of 2021, and we're off to a great start. But the metals and mining industry has gone through a bear market that's really been basically a 14-year bear market. And while gold has broken out to new all-time highs, and silver is starting to break out now too, the mining equities have really underperformed, and that's why we decided with our macro themes that this was an area that we wanted to focus on. And so we started this sector-focused fund, the Precious Metals Fund. It's an equity-focused mining investment fund focused on precious metals. Gold and silver are the predominant assets that we're going after. We do have some base metal targets in our portfolio as well: copper, zinc, nickel, and so forth. But it's predominantly a gold and silver based equity portfolio, and it is among the top performing sector focused funds also in the Preqin database, and something that we'll be talking about more. But the fund is the Precious Metals Fund is really starting to perform again, and is at a new high watermark now, and it's outperforming all of the benchmarks. And we now have a 5-year track record. So come check it out. I think we're still in the early innings of a new bull market for precious metals mining equities. And I think we have a killer portfolio. let's go on to the next. So this is looking at all of Crescat strategies and performance updated through July, including the side pocket performance back on July 1st of 2024. One of our private company investments that we had in our portfolios, San Cristobal Mining, which owns a large silver mine in Bolivia, was our auditors, Deloitte had pretty much forced our hand into putting that into a side pocket. We took it to a shareholder vote, and which passed with overwhelming approval, and we moved that asset into a side pocket on July 1st of 2024. So we show both the X side pocket and the full fund performance, including the side pocket now. And you can see that including the side pocket, all of our funds are also performing really well year to date and hitting new high water marks, with the exception of global macro, still just a couple percentage points behind it, that high water mark. But with the, both X side pocket and including side pocket, all of our funds except global macro are in new high watermark territory, and I'm really excited. What differentiates the global macro, institutional macro, and long short hedge funds from the more long only metals focused funds is really that we have all the other macro themes of our fund. The equity focused ones we were able to express in the long short hedge fund. And in the two macro funds, that's where we can trade any asset class, including currencies, commodities, fixed income, as well as the equities. And so the activist metals theme is one of our largest themes in those funds too. But we have all the other themes, and including the short positions, and especially the equity short positions that we have in global macro and long short that have helped those two funds to be among the top performing hedge funds in the world year to date. And I think there's so much more to play out there too for those themes. And let's look at why in this next slide, which is my last slide. And that is that, I believe very strongly that we are in another tech bubble, an AI bubble that is responsible for creating the most overvalued large cap U.S. equity markets that we've ever had. More overvalued than 1929, more overvalued than the dot-com bubble, and more overvalued than where we were back in 2022 at that intermediate market peak that we had back then. There's a chart that I'm not showing today, but I'll update it again soon, that I've shown in the past that I think exemplifies the extent of this bubble more than any other. And that's when you look at the top 10 market cap stocks in the US relative to GDP. And you can look at it relative to US GDP or global GDP. It shows the same thing. We are truly at the highest valuations for this concentrated group of large cap stocks that we've ever been. And in fact, we're 160% higher, 2.6x higher on the EV to GDP measure of the top 10 S&P 500 stocks relative to GDP versus where we were at the peak of the tech bubble. So a lot of these comparisons will try to say that we were a higher valuation in the tech bubble. We are even higher valuations today in my analysis and in the way that I look at it. And it's because we have unsustainably high profit margins and unsustainably high growth rates that have all been great for the Mag 7 type stocks. But these profit margins, these growth rates, they're unsustainable. And when you stack the really high record valuations on top of it, we were in we're near what I think is the peak. I've said it before, and I've been early, and we've had fits and starts of being right. But I think we're near the peak of one of the biggest stock market bubbles of all time. We're not giving up on our short positions in our global macro and long short hedge funds as a result. I think this is a time more than ever that you want to employ a Nassim Taleb style of strategy using put options to get that asymmetric upside to a potential major down move in the market. I don't know when it's going to happen, but that allows you to stay in the game and only lose a little bit of money, as those put options may not be working, but then be able to capitalize on them when you do get that dislocation in an asymmetric way. That's how we were able to capitalize earlier this year in those two funds. It's why they're some of the top performing funds in the world year to date. That's both the global macro and the long short fund. And especially in April, but also in February of this year, when the Mag 7 were correcting, we were able to capitalize on that, and we were able to ring the register on those put options in a way that preserved those profits too. Given where we are now with the market retesting all-time highs once again, with volatility very low, it's an excellent time I think to put on that type of exposure and strategy. Having some put options on S&P 500, NASDAQ, on Mag 7 stocks is, I think it's an incredible time to do that. I think the rest of the world is completely on the opposite side of the boat there, and that's why we're in a bubble that's one of the biggest ever. So